Good morning. Welcome to Top of the Morning by Mint, your weekday newscast that brings you five major stories from the world of business. It's Friday, March 14th, 2025. This is Nelson John. Let's get started. LG Electronics India is set to hit the stock market after securing approval from SEBI for its massive 15,000 crore rupee IPO. This marks the second South Korean company listing in India after Hyundai Motors India went public last year. The IPO will be a 100% offer for sale, OFS, meaning the proceeds will go to the South Korean parent company, not LG India itself. The company will offload over 10.18 crore shares, representing a 15% stake in India's unit. LG India is a dominant force in home appliances and consumer electronics, offering washing machines, refrigerators, televisions, air conditioners, and microwaves. With manufacturing facilities in Noida and Pune, the company serves both B2C and B2B customers in India and abroad. Financially, LG India reported a revenue of 64,087 crore rupees for FY24. Investment heavyweights Morgan Stanley, JP Morgan, Axis Capital, BofA Securities, and Citigroup are managing the IPO. With roadshows already underway, LG's listing is set to test investors' appetite for consumer electronics amid India's growing demand for premium appliances. India's auto industry has been on a tear, with vehicle sales crossing 4 million annually, making it the third largest car market globally. The Nifty Auto Index surged 36% annually from pandemic lows, outpacing the broader market. But the rally is losing steam. Since September, Nifty Auto has dropped 25%, and Tata Motors, once the sector's star performer, has lost a third of its value. At the heart of Tata's troubles is Jaguar Land Rover, JLR, which contributes over 70% of its revenue. Weak demand in Europe, tightening emission norms, and a slowing Chinese market have hit JLR hard. China's shift to EVs has also hurt JLR, with JLR's local sales plunging 27%. The US market isn't offering much relief either, with potential tariff hikes looming. Domestically, Tata Motors' EV market share has fallen from 73% to 53% amid rising competition. Despite these challenges, the company remains optimistic, with JLR expected to generate strong free cash flow. Investors are watching closely. Can Tata Motors bounce back? The coming months will tell. Reliance Consumer Products Limited, RCPL, is gearing up for a nationwide expansion. But it's going to take some time. The FMCG arm of Reliance Industries plans to roll out its brands like Camper and Independence across India in the next 3 to 4 years, gradually scaling from its current 30 to 35% coverage. RCPL has made waves in the market, reviving legacy brands like Camper Cola and Sil, while launching private labels in categories like packaged foods, personal care, and cleaning products. Its aggressive pricing strategy has already dented market leaders, with Camper grabbing over 10% of the sparkling beverage market in key states. While RCPL is leveraging Reliance's retail massive presence, its real challenges lie in building a strong general trade network, which is crucial for India's mom-and-pop driven market. Analysts say scaling an FMCG distribution network takes years, but Reliance's deep pockets and dominant media reach could accelerate the process. The company is targeting 5 to 6 million retail outlets within the next 3 years and is eyeing international expansion into Africa and the GCC. With a 1,000 crore rupee turnover expected from both Camper and Independence in 2025, Reliance is clearly in for the long haul. CG Power is riding India's infrastructure wave, securing a 450 crore rupee contract for Vande Bharat trainsets, pushing its stock up 2.7% despite a recent market dip. Now, this deal cements CG Power's dominance in railway modernization with long-term service agreements and cutting-edge safety tech like Kavach. But railways are just one piece of the puzzle. The company is making a bold play in semiconductors, acquiring Renesas Electronics RF business and launching a 7,600 crore rupee chip assembly facility in Gujarat, backed by a hefty government subsidy. Once operational, this OSAT plant could be a game changer for India's tech self-reliance. CG Power is also ramping up manufacturing, expanding transformer production, and eyeing acquisitions to strengthen its global footprint. Its 9,706 crore rupee order book, a 70% year-on-year jump, signals strong growth ahead. But despite short-term market swings, brokerages are bullish. Nomura sees a 33% upside, while technical analysts predict a breakout. With India betting big on infrastructure and tech industries, CG Power is shaping up to be an industrial powerhouse investors cannot ignore. Sun Pharma is doubling down on its specialty business with the acquisition of US-based Checkpoint Therapeutics, a move that strengthens its foothold in oncology. The deal, worth $355 million or about 3,000 crore rupees, gives Sun access to Unloxit, a newly approved skin cancer drug yet to hit the market. Unloxit, approved by the US FDA in December, is used to treat cutaneous squamous cell carcinoma, CSCC, and could expand into treatments for other cancers. Analysts see at least a $500 million peak sales opportunity, with Sun leveraging its global reach to commercialize the drug beyond the US. While this acquisition bolsters Sun's oncodermatology pipeline, it will impact earnings in the short term as the drug is yet to generate revenue. Checkpoint itself has been loss-making, with a $27.3 million net loss in 2024. But for Sun, it aligns with a broader strategy. Its specialty segment has grown at 25% CAGR, now contributing 18% of revenue. Sun Pharma's gross margin have improved to 77.7% this year, thanks to higher margin specialty drugs. But the stock, down 11% in 2025, faces hurdles like US trade measures. A successful Unloxit launch could be the next big catalyst, while any delays may keep investors cautious. That's all for today. Thank you for joining in. We are eagerly looking forward to our next Top of the Morning episode, which will be packed with the latest in business news. Until then, this is Nelson John signing off. Have a nice day.